Hi, and welcome to another episode of Venture. On our program today, our guest will be Greg Barnes from Hyde Park Ventures. But before we get into that, let's take a look at some of the venture stories going on in the built environment. On Tuesday, real estate tech companies VTS and Hightower announced a $300 million merger. The two cloud-based leasing and portfolio management platforms will merge under VTS's name and be led by VTS Chief Executive Nick Ramito. At Trimble Dimensions 2016, the company announced that they've entered into a definitive agreement to acquire building data. General Manager of Trimble's MEP division, Pat Bull, said, with the addition of building data, Trimble continues to reinforce its commitment to providing data and analytics solutions to the construction industry. Energy management company BuildPulse recently secured $1.3 million from a group of Seattle angel investors, with the Natural Resources Defense Council announcing in October that if buildings were countries, they'd be the third largest consumer of energy globally. BuildPulse plans to use the new funds to expand its building energy analytic platform to help facility teams reduce energy usage. Israeli smart lighting company PointGrab announced raising $7 million for its sensor technology. The announcement comes just months after Markets and Markets reported that the global smart building market is projected to increase at a 34% compounding rate over the next 5 years. Intel has acquired German commercial drone company startup Vinci for an undisclosed price. With help from Ascending Technologies, another drone company Intel acquired earlier this year, Vinci will help the computing powerhouse expand its business to several industries, including construction. After President-elect Donald Trump made vows to boost infrastructure spending, Australian-based construction materials and equipment group Boral Limited agreed to acquire U.S.-based Headwaters Incorporated for $1.8 billion. Boral's chairman Brian Clark said Headwaters' complementary portfolio of assets made for a highly compelling acquisition. In a previous episode of Venture, I sat down with Jesse Devitt from Borealis Ventures. Now, Jesse and Borealis Ventures have a lot of experience in the AEC realm. But on this episode, we caught up with a venture firm that just started dipping its toes within the built environment. Hyde Park Ventures, headquartered in Chicago, has one AEC industry tech company in their portfolio, and that's Bridget. I spoke with Greg Barnes from Hyde Park Ventures, and we talked about what it's been like investing in a tech company within the AEC industry. Take a look and let's see what Greg had to say. Welcome, Greg. We're glad to have you here on Venture. Before we get into anything, why don't you just tell us a little bit about yourself and then also Hyde Park Venture Partners?
Absolutely. Well, thank you for having me. So my background is both in operating and investing. So I spent a number of years doing strategy and operations for both seed stage startups as well as more mature growth stage companies.
So one of those companies in your portfolio I noticed that falls under the built environment is Bridget. And I was just curious, like, how you guys got connected with Bridget and what was it that really drew your interest to them?
It's a great question. So as I mentioned, we invest in Ontario. And so we spend a lot of time in both Kitchener, Ontario, where the University of Waterloo is. It has a great tech ecosystem developing, and also Toronto. And during my time there, I was connected to an investor named Scott Pelton, who at the time was with Mars IAF and is now with Round 13 Capital. And he had participated in a pre-seed round for Bridget. And so knowing that we have a geographic focus and an early stage focus, he connected me to the Bridget founder, Mallory Brody, about 1.5 years ago. And so I got connected with the team then and just started tracking and monitoring their progress, getting to know the team. And then we invested earlier this year. So what really got us excited about Bridget was that it was a really passionate team that was solving a problem that they had discovered in the early stages of their company development by doing a lot of primary research. And so we knew that there was a problem they'd identified that they were really passionate about solving. And in addition, they were able to lay out a really aggressive plan for growth from the time that I first met them to the time we invested. And they were able to hit their plan the entire time. And so we knew, one, the team was tremendous. They could do what they said they were going to do. And the problem they were solving is something that is really interesting because not only is it of high value for the customer base, but when they go sell, when they sell into their customers today, they're often replacing pen and paper. And so it makes the sales process pretty easy. And so that got us really excited about the opportunity. And as seed stage investors, we're really focused on the team that we're backing, the market that we're going into, and how the product fits into that market, and then early signs of early evidence of success. And I think the Bridget team was able to demonstrate all of those things. So they were a team that we thought had a higher than average probability of success. We thought the market was really ready for new entrants, and we also thought that the progress that's shown in the business was a good indicator that they'd have success going forward.
Can you just quickly describe what that problem was that they were trying to solve?
Yeah, absolutely. It's really communication between general contractors and subcontractors. Okay. The first product was focused on punch list, but the problem really is broader than just the punch list, and it's communication from the GCs to the subs, and then that extends from the subs down into the other folks on the job site. So it's really job site collaboration for construction.
Is that I guess that aggressive element to that team? Is that something you look for and would hope that everyone that you invest in or everyone that you do invest in has that element to them that it's these people have an attitude that's completely different? Is that a key factor?
Yeah, I think so. I mean, we often talk about it as tenacity. Okay. So we want entrepreneurs that will go and do whatever it takes to solve the key challenges they run into as a business. And the founders of Bridget, absolutely demonstrate that throughout the time that we were getting to know them, and then even since then, the business is doing really well, and they've, they have a lot of challenges. They're going into a market that is a relatively new adopter to software, and so they have to convince folks that have maybe never bought software before that they should be buying software for this purpose. And that means, walking onto job sites and finding the site supervisor and convincing them that they should buy their product. And a lot of entrepreneurs are really excited about, developing strategies or even trying to sell from their office, but you ask them to get out in the field and really literally put on a hard hat and go sell the product, and it's sort of a different challenge that very few are willing to go tackle, and they've done it time and time again.
That's really neat that they did that.
Oh yeah.
In what ways has Hyde Park Venture Partners post-investing helped guide Bridget to help you guys all meet the end goal?
It's a great question. So for early stage companies, they raise capital to do any number of things, but with just a couple of different goals in mind. One of those goals is to get far enough along that they can raise their next round of capital. A goal also could be they get far enough along to be cash flow break even and just operate the business off of their profit. But for the highest growth companies, it's usually they raise a seed or Series A round so they can get far enough along to raise their next round. And so that's really the role that I've been trying to help play within Bridget, is trying to make sure the team has all the pieces in place, the company has all the pieces in place to raise the next round of capital. So that can mean everything from rounding out their management team to understanding the key metrics that follow-on investors will focus on, helping think through how the product extends into other parts of their customers, that sort of thing. So it's really I'm trying to help the team focus on preparedness for the next round.
After looking at your list of portfolios, it seems like you guys invest in mostly software. Is that the case?
It is, yeah.
Why is that?
Software companies typically require significantly less capital to launch a business, to acquire customers, and then over time to scale the business. And we're a relatively small fund based in the Midwest, where there isn't as much capital as on the coast. So we like the ability of software companies to be capital efficient, and they don't need to raise a lot of capital to get really far along. And because of that, we've tended to skew more towards software. The other thing is that as an investing team, we have much more experience on the software side. So I think we can be more helpful with the team going forward.
So what exactly would you say the market is like right now for tech companies within the built environment like Bridget? And then how does that compare to other tech companies like the other ones that your firm invests in?
So I think it's a really good time for companies that are in the built worlds. The reason I say that is partly because of what I talked about before with Bridget, which is that in many cases the product they were selling was replacing pen and paper. And so in real estate and construction, a lot of the potential buyers of software are relatively new to bringing software into their organizations. So because of that, there aren't a lot of really deeply entrenched competitors in the markets. And the industries are going through this transformation that is providing opportunities for new entrants. So I think because of that, the market is in the maturing phase, not completely mature yet from a software adoption perspective. So I think that's very important for markets where new companies are looking to obviously grow quickly.
How is it different when looking at companies within the built environment and then ones in different industries? Like, what are some things that you really have to look hard into in other industries because they are more matured that maybe just not be there for the built environment?
In markets that are more mature, you see how companies perform versus others head-to-head in sales. Meaning, if you acquire a big Fortune 500 company, it's interesting to understand who else that Fortune 500 company was considering when making the decision to buy the software. Let's say that's in any other vertical outside of the built environment. But in the built environment, you're often not going head-to-head because the market is really wide open at this point. So you can add a lot of customers without having direct competition in your sales process. So I think that is key to understand how you win and lose versus competitors. And then also in the more mature software adopting markets, there's more competition for when renewals come up. So typically, you have 1-year contracts with SaaS businesses, and when the end of the year comes up, a lot of competitors are coming in trying to take your business. And so renewals are certainly important in built environments, but at the same time, you may not have as much competition, so it's maybe less of a sign of how you would do versus your competitors than it would be in a more mature market.
Thanks again for tuning into this episode of Venture. To never miss a beat, subscribe to our channel so you can see what else we're up to. We look forward to seeing you guys next time.